and talk about different ways people can get the best out of their loans, given where interest rates are at the moment. Julian Finch is mortgage broker at Finch Financial. Julian, good to see you again.
Andrew, good to be back. Thank you.
Now, of course, the focus being on more rate cuts to come. We know the RBA disappointed at its last meeting, but there's still the expectation they're on track for another 2 or 3 cuts this year. What does that do to the mindset of people who have a loan?
Yeah, look, I think definitely we're looking forward to some more easing in interest rates. So I think people are probably suffering a little bit of financial fatigue, if I'm honest. It's been in the media for quite some time now, obviously with more negative commentary with rates going up, but we're into that area where we start to see a bit of light at the end of the tunnel, and I guess there's a few different ways, particularly with the property market, that you can probably extract some discounts out of your mortgage without having to wait for the RBA.
Well, okay, how do you do that?
Yeah, look, so one of the things that we've been seeing recently, people revaluing their properties, a lot of lenders offering discounts for lower LVRs and things like that. So it's certainly worth checking in with your bank or your broker to get your property revalued and see if there might be a discount on offer. You know, if your property's gone up in value and of course your loan to value ratios come down, you might find some better pricing at your bank.
Is now the time to refinance?
Look, it's always time to refinance if you can find yourself a better deal. But look, refinancing is not always the best answer, and so finding just better pricing at your existing bank sometimes is good enough, to help your budget.
Yeah, bottom line, shop around. What about the sort of loan you're after, and there's that ongoing debate about fixed and variable, particularly if interest rates are moving?
Yeah, look, there's some really competitive fixed rates in the marketplace at the moment, but if you take a view sort of 12 to 18 months forward, you probably wonder if they're still going to be competitive. So if you're looking at a 2-year fixed rate, 4.98% is a rate that comes to mind from a lender in Victoria, Bank Vic, for some emergency services, a 2-year fixed rate. But if a Macquarie Bank's at a 5.64 or 5.59 now, and we get a 0.5% rate cut over the next 6 months, well, that 2-year rate starts to look a bit sloppy.
How do the investor loans look at the moment?
Investor loans starting with a 5, so certainly getting a lot closer to the owner-occupied mortgages, less of a spread, I would say, than there has been previously, and probably just an indication that lenders are looking to take on some of that investor risk.
What do you say? Are you seeing more interest from investors at the moment?
Definitely a lot of investors entering the market. Since the first rate cut in February, there's been a lot of purchase activity, and it's probably evenly split between owner-occupiers and investors, but certainly, we went through a period where a lot of investors were selling, and I think we've got some cashed up buyers there in the investment space looking to pick up some good bargains, especially with the increases in rent that we've seen over the last 24 months.
What have you seen up until this point? I mean, there's talk that a lot of investors were being squeezed, forced to sell because they couldn't carry that debt. Similarly, I guess, with owner-occupiers who were struggling to pay their bills. But now interest rates are coming off. Is it providing a bit more of a breathing space so there's less pressure, particularly on forced selling? Yeah,
well, certainly, obviously, the reduced cost improves cash flow, but we've also seen, obviously, a lot of rent price increases. So the yields on residential property are probably at the top end of where they might have been over the last 3 or 4 years. So certainly there's still some good shopping to be had in the unit market. Certainly the unit prices haven't increased as much as the detached houses or the land values, but so our investors are certainly finding some value in the unit with the high rental returns.
And how important is a credit score at the moment? Obviously, people do have bad debts. Obviously, it's a blight. But how important is that right now? Yeah,
look, credit score is always important. Obviously, we want to keep a clean credit history. It makes it a lot easier to deal with a range of different lenders. But look, poor credit score is not the end of the world. There are solutions available to people. I guess it's just a matter of how bad the situation might have got, or how well you've managed to manage it and pull yourself through the other side. So look, a good credit score is always better, but it's not the end of the world if you need to find a solution.
And I see you also point out it's important perhaps to streamline your debt and the loans that you have. One example being you can roll your personal loans into your home loan.
Yeah, look, certainly some of these unsecured debts are, they make things difficult. They've got a high sort of budget impact when it comes to lender servicing calculator. You can roll debts into your mortgage. Certainly you could look at getting the cheaper rate because it's a secured loan, but you also might look at just separating that debt from your 30-year home loan. You might just sort of put that over 4 or 5 years so you can pay it off a little bit quicker, but obviously at the cheaper interest rate. So there are ways definitely that you can use your property to reduce the cost of some of the debt that you've got in your personal balance sheet.
And of course also you need to look at the fees associated with your loan as well.
Yeah, definitely. Typically with consumer lending, there aren't that many fees associated, certainly no early exit fees and things like that. So it's easy to shop around and definitely, making sure you're managing your debt properly is going to obviously have a good outcome for you.